Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 28th, 2025, and we're diving into Domino's Pizza's first quarter financial results for 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Domino's Pizza, the largest pizza company globally, has just released its Q1 2025 earnings report. It's an interesting mix of growth and challenges, and I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the revenue and profitability. Domino's reported a total revenue of $1.102 billion, marking a 2.5% increase from the previous year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by higher U.S. franchise advertising revenues, increased supply chain revenues, and higher international franchise royalties and fees. Despite a slight decline in U.S. same-store sales, international growth and strategic pricing adjustments have bolstered their top line.
And what about profitability? How did they perform in terms of net income and earnings per share?
Domino's net income surged by 18.9% to $149.7 million, and their diluted EPS increased by 20.9% to $4.33. This impressive growth in profitability is largely due to favorable changes in unrealized gains from their investment in DPZ and a lower weighted average diluted share count from share repurchases.
Operational efficiencies and future outlook. Domino's reported an income from operations of $210 million, which is a slight decrease from last year. However, their free cash flow increased significantly. Can you explain this, John?
Sure. While income from operations saw a marginal decline due to foreign currency impacts and severance expenses, free cash flow jumped by 59.1% to $164.4 million. This was driven by improved operating cash flows and reduced capital expenditures. The company's focus on operational efficiencies is clearly paying off.
And what about their future outlook? How does the CEO's statement reflect their strategic direction?
CEO Russell Weiner emphasized their hungry for more strategy, which focuses on driving more sales, stores, and profits. Despite a challenging macroeconomic environment, Domino's is committed to long-term value creation for franchisees and shareholders, leveraging their market share growth in the QSR Pizza segment.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $4.12 for Domino's, but the company reported an actual EPS of $4.33. That's a beat of 21 cents. How are analysts reacting to this, John?
The EPS beat is a positive surprise, exceeding expectations by a significant margin. This reflects strong operational performance and effective cost management. Analysts are likely to view this as a sign of Domino's resilience and strategic execution in a competitive market.
Do you think this will impact their stock performance in the near term?
Absolutely. Beating EPS forecasts often leads to positive market reactions, and we could see an uptick in Domino's stock as investors gain confidence in their growth trajectory and strategic initiatives.
Key takeaways. In summary, Domino's Pizza has delivered a strong performance in Q1 2025, with notable growth in revenue and net income, and an EPS that beat analyst expectations. John, any final thoughts on their investment prospects?
Domino's continues to demonstrate robust financial health and strategic foresight. Their focus on operational efficiencies and market share growth positions them well for future success. Investors should keep an eye on their international expansion and digital innovation efforts.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Domino's performance in the comments below.